Welcome to my channel Traders. Today we're going to be talking about the most powerful concept in trading, which is the smart money. By understanding how big players in the market, also known as smart money, operate, we can gain a significant edge in identifying supply and demand zones in the market. So grab a pen and paper and let's get started on learning how to trade like pros. But the first thing that we're going to be looking at is market structure. So to clearly identify supply and demand zones within the market, we have to know how the market moves. We know that the market actually moves in either an uptrend, a downtrend, or a neutral trend, where the market is not necessarily moving in any direction. It's just bouncing up and down in a chart. But I want us to focus on uptrends and downtrends for this video because these are easier to identify on the market and also easier to trade. So looking at an uptrend, we know that in an uptrend, the market is actually making higher highs and higher lows, higher highs and higher lows, and the market is just pushing all the way to the upside. What you want to do in an uptrend is to move with the market. You don't want to go against the market. You want to wait for the market to actually push all the way to the downside and continue pushing with it all the way to the upside. So how do we identify supply and demand zones using the smart money concept? What we want is for the market to actually keep breaking its highs. Here we have a higher high, and we can clearly see that the market broke this high and continued pushing all the way to the upside. We have another higher high right here. The market pushed and broke this high right here, and we have a last high right here. And this is where you have to focus because we're going to be preparing our buys to push all the way to the upside. Once the market actually break its last high right here, there is a rebuttable presumption that the market is going to continue pushing all the way to the upside. So after this last break right here, we want to prepare our demand zone. Remember, we are in an uptrend, so we want the market to actually push all the way to the downside to our demand zone so that we can continue pushing all the way to the upside. And how do we identify our demand zone? We're going to be looking at our recent higher low. So the market actually has to push all the way to our higher low right here, and that's when we're going to be preparing our buys to push all the way to the upside. So if this was identified on the daily chart, you would actually wait for the market to start pushing all the way to the downside like this. This would typically be on your 1 minute chart or 30-minute chart, and wait for the market to push all the way to your demand zone. And you want to wait for the market to actually change in direction. So if the market was making lower lows and lower highs, pushing all the way to the downside, you want the market to start breaking structure and changing in character or changing in direction. So if the market was making lower lows and lower highs, you want the market to start making higher highs and higher lows. And this is going to indicate to you that the market wants to start pushing all the way to the downside. And the reason for that is because of this strong demand zone right here. So this is how you actually identify a demand zone in an uptrend. You want the market to be making higher highs and higher lows and breaking its highs. And on the very last high, you want the market to actually push all the way to the upside and prepare your demand zone. Your demand zone is going to be your recent higher low, and you're going to be switching to a smaller time frame and wait for the market to push all the way to your higher low. And this is where you're going to be taking your buys to push all the way to the upside. And let's look at a downtrend and how you would actually identify your supply zones and keep pushing with the market to the downside. Again, with the downtrend, you want to move with the trend. You don't want to go against the trend. If the market is pushing all the way to the downside, you want to push with the market all the way to the downside until the market starts breaking structure and switching in direction and pushing to the upside. So if the market is making lower lows and lower highs, you want to move with the market. The market has to actually keep breaking its lows, and we can clearly see that the market broke its last low right here. After the breakage of the last low, this is when you're going to be preparing your supply zones. And remember, your supply zone is going to be your last lower high. This is typically where you would find an order block. So you want the market to actually start pushing all the way to your lower high on a smaller time frame. So this would be on your H1. You want the market to start pushing all the way to your lower high. And again, this is typically where you would find your order block. And you want the market to actually change in direction. So if the market was making higher highs and higher lows, pushing all the way to this supply zone right here, you want the market to actually start breaking structure on smaller time frames. So the market would then break structure on a smaller time frame, and this is when you would actually start taking your cells to push all the way to the downside. And this is how you identify your supply zone using the smart money concept, and this is how you identify your demand zone using the smart money concept in an uptrend. So I want us to actually look at a real chart and how you would actually go about doing this. So when we switch to a real chart, I want to show you guys an example of how you would actually identify your demand zone. As we can clearly see, this is a nice uptrend. The market was making higher highs and higher lows, higher highs and higher lows, higher high and higher low. And this is a section that I want us to focus on. I want us to focus on what the market actually did right here. But before we can actually go there, I want us to look at how the market was actually breaking structure. You can see that the market was making higher highs and it was breaking structure, and it made its very last high right here, which was broken by this candle right there. There was a breakage of structure right here, and this was an indication that the market was going to continue pushing all the way to the downside. What you want to do is wait for the market to push all the way to your demand zone and continue pushing with the market. I want us to look at a smaller time frame. And when we switch to our H1, we can clearly see that the market was actually pushing all the way to the downside, and it came to this level right here, and this would then be our demand zone. And we wait for the market to hit this level, and after it hits this level, we want the market to change in character. It has to change in direction. So if the market was making lower lows and lower highs, pushing all the way to the downside, we want the market to start making higher highs and higher lows, and this is when we would actually start taking our buys to push all the way to the upside. Let's look at another example of how the market actually moved and how to identify a demand zone in an uptrend. Let's look at what happened here. We can clearly see that the market was actually moving in a nice uptrend. It was making higher highs and higher lows, higher highs and higher lows, and this is a section that I want us to look at. You can actually also see that the market was breaking its highs. The market just kept breaking its highs, pushing all the way to the upside, breaking its highs, and the market actually broke its high right here. This was the last high that the market broke. And when we switch to a smaller time frame like our H1 to hit our demand zone, and that's when you would actually start preparing your buys to push all the way to the upside. So the market actually broke its high. From here we can clearly see that the market broke its last high right here. There was also another high right here that the market broke, and after breaking this last high right here, the market pushed all the way to the upside, and it came to this demand zone right here, and that's when it started pushing all the way to the upside. And this is how you identify your strong demand zones in the market using the smart money concept to push with the market all the way to the upside. I want us to look at supply zones when you are looking for sales within a selling market, how to properly go about doing that. So when we are in a selling market, we can clearly see that the market was actually making lower lows and lower highs, lower lows, lower high, lower low, lower high. And I want us to look at what happened right here. The market was actually breaking its lows right here. You can clearly see that the market broke its low, and this was the last low that we looked at right here. And after breaking its low, what you want to do is switch to a smaller time frame and look for your supply zones to push with the market all the way to the downside. So we would switch to our H1. And after switching to our H1, we can clearly see that the market pushed all the way up, came down, and when it came to this level right here, this is when you would actually start taking your sales to push all the way to the downside. But like I said, just because you identified your supply zone doesn't necessarily mean that the market is going to respect it. You have to wait for the market to actually violate structure or to change in character. So if the market was making higher highs and higher lows, you want the market to actually start breaking those lows, start breaking lows to start pushing all the way to the downside. And that's when you would actually start preparing your sales to push all the way to the downside. And this is how you actually identify your supply zones in a selling market using the smart money concept. Let's look at another example. You can clearly see that the market actually broke its structure right here. It made a lower low right here, and the market actually broke that low, pushed all the way to the downside. And what you want is for the market to, after the market actually break its low, this is when you would start preparing your supply zones to push all the way to the downside. And this is where we would actually identify a supply zone. You can clearly see that the market started pushing all the way to the upside. It pushed all the way to the upside, came to this level, and that's when it started reversing. and pushing all the way to the downside. This is where you would actually start taking your sells, your further sells, to push all the way to the downside. And you would have been able to do this by identifying the supply zone, and the market came to this level, respected this level, and started pushing all the way to the downside. And this is how you actually identify demand and supply zones using the market structure, applying the smart money concept. What you want is to identify where the market is actually moving. If it's moving in an uptrend, you would look for your demand zones where the market would touch and continue pushing all the way to the upside. And if the market is moving in a downtrend, you want to identify your supply zones where the market is going to touch and continue pushing all the way to the downside. And this is exactly how you go about doing that. I want to thank you so much for tuning in. And if you're enjoying the content and finding value in my teachings, I would greatly appreciate if you hit that subscribe button and turn on notifications. By subscribing, you'll be the first one to know when I upload my videos on trading strategies, market analysis, and much more. Plus, you'll be part of a community of traders who are striving to improve their skills and make consistent profits. So don't wait, hit that subscribe button, and let's continue on this trading journey together.